So, am I going to get fired? Are the mortgage rates on homes going to go down? Is the cost of goods finally going to go down? Is anything going to change with the economy right now? Everything, guys, is hinging on the Fed's decision on what they're going to do with the Fed rate. You see, the federal fund rate has been currently holding up to 4.33%, and it has been extremely stable and not changing. But so many people are wondering, when are we finally going to get these rates to drop? When is Jerome Powell finally going to make the decision to decrease the rates? It's not that simple, and I'm really worried a lot of people right now are being optimistic that it is going to get cut, and it's not. And a lot of people are not going to be ready for how the market is going to respond and how your job also might be in jeopardy. Now, there's some good news that's coming out. If you're looking in the market right now, you're seeing a lot of people are starting to feel really good and the treasury yields are starting to drop. The reason being is there's so many companies right now that are predicting that September we're finally going to get the first Fed rate cut. Now, for most people who don't understand what a Fed rate is, let me explain to you, because you're hearing this word so many times and you might not understand what's the big deal about a Fed rate. The Fed rate is the rate that the Feds charge to banks in order for them to borrow overnight. And this, to make it as simple as possible, it's expensive for the banks to borrow money, so in return they make it expensive for you to borrow money. It's simple as that. And right now, with the Fed rate being so high the way it is, that's why you're seeing mortgage rates, car loans, credit cards. Every interest rate that's out there is dictated on the Fed rate, and that's the reason why most of us are paying extremely high interest rates. Now, a Fed rate is not only about the amount of money that you could borrow, it's the amount of money that a company could borrow. Because if the company you're working for is not able to borrow as much as they like, or they have this project that they were depending on using credit in order to invest in to get some capital, well, guess what? They cannot invest in that project. That's the reason why so many companies are laying so many people off. So many people right now are getting laid off simply because the Feds have not decreased the rate. Now, economists in JP Morgan expect the rates to drop not just once, but twice this year. They're expecting it at least to go to 3.75%. And BlackRock is being a little bit more skeptical and they're expecting it to drop to 4% this year, which by all means, if that's the case, that's awesome. But I'm a little worried and I'm a little hesitant. First of all, let me tell you why. The Fed rate is always going to increase or decrease depending on the inflation and the job market. Right now, inflation is, believe it or not, is going down. So many people feel really good about it. And that's why you're hearing Trump being so impatient and just pushing and pushing for the Feds to drop the rate. But there's a little caveat that a lot of people need to understand. Jerome Powell has been saying this so many times in his press conferences. He speaks about tariffs. You see, tariffs is one of these things that people expect things to change automatically. As soon as a tariff is introduced, as Trump did, then you're thinking that everything is going to be expensive currently in this time. And did you guys really see what Apple did? Apple flew in planes of iPhones to the United States in order to beat the tariffs. And that is the number one reason why I'm a little skeptical. You see, because when it comes to tariffs, it takes some time to really reflect in the market. And that's why the Feds are being nice, calm, and patient to see exactly what the ripple effect is going to be. And the reason for that is this. A lot of these merchants, they bought up a whole bunch of product and stocked them on the shelves in anticipation for the tariffs. So the prices that they paid weren't the prices with the tariffs. So most of us, unless you go into some shady ass establishment, are not dealing with the actual increase of prices due to tariffs. But what is going to happen when those products go away? What's going to happen when all these companies now need to start buying stuff based upon the price of the tariffs? That's going to change drastically the whole economy, especially the consumer price index. You see, tariffs, guys, is the big problem we have here. Everyone hearing about inflation, because that's stuff that you're dealing with for the past few years. But tariffs is the number one thing that I feel like a lot of people are not prepared for. And the tariff war is not over. Yes, Trump right now is negotiating with China. He's trying to make some type of agreement, which hopefully that happens as soon as possible. But it might just be a little too late. And that is right there, number one concern that so many people are having with the economy. But this is not all about just being negative. This is all about just letting everyone know we don't know exactly what's going to happen during these times. So we really need to prepare. A lot of people really feel like the Feds are going to cut the rate because they have no other choice. And eventually that is something that they would have to do. That's why now you're seeing so many of these treasury yields dropping tremendously in anticipation of people thinking that September is going to be the first Fed rate cuts. Now, what does this mean for the average American? Let's say, for example, the Fed rate does cut, which, let's be optimistic here, hopefully it does. This means that hopefully this year you will now be able to get better mortgage rates. So for anyone right now who bought a home within a year pretty much where their average mortgage rate was 7%, this could now be a time to hopefully allow you to refinance your mortgages to get a lower rate. So for anyone right now that's currently in a high mortgage rate, take your time, start saving, start building up, and make sure you're able to take advantage of the rates being decreased. And if you're someone right now that's in the sidelines waiting to buy a home, this is even better news for you. Because recently I saw there's more sellers than buyers. Now listen, when it comes to the home market, I understand that so many people in the home market are selling prices that are just extremely overvalued. But if you're able to get at least a 2% decrease in your mortgage rate, that will have a huge ripple effect on your payments. And also, this is really good news for people who own bonds. Now the prices of your bonds are going to go up, especially if it's long-term bonds. And there's so many people right now, especially the elderly, that have a portfolio that has more bonds than equity in it, is now going to be able to at least rest a little better and feel calmer in knowing that the portfolio is not going to take a big hit, and finally they're going to start making a whole lot more than they were before. And also, let's just not forget, if this does happen, we all know the stock market is going to rally. So for everyone right now during these times, we are going to benefit. And that's why, guys, I always tell people to continue to invest, never ever stop. We just been through so much turbulence in the market and uncertainty with tariffs, inflation. Things have been extremely difficult. But if you're someone that hanged on tight and you kept on investing, right now you're going to be rewarded. And also, it's not strictly just only about people who just invest in the market. It's also about the job that you have right now. You might have a lot more stability in your job now, especially if the market starts rallying. So guys, drop a comment down below and let me know, what do you think the Feds are going to do in September? Do you think they're going to cut the rate? Or do you think the tariffs is going to ruin it all and the Fed rates will remain the same? Drop a comment down below, guys, because I would love to hear it. At the same time, hit the like, leave a comment, and subscribe. Catch you guys in my next video. Peace.